Hello and welcome to the special IPO KYC of Hyundai Motor India Corporation. It boasts of many firsts. India's largest ever IPO in terms of offering at more than 27,000 crore rupees, valuing the company at $19 billion. It's also the first time in more than 2 decades we're going to have an auto company getting listed in India since Maruti's listing in 2003. Now, Hyundai needs no introduction. It's India's second largest passenger vehicle maker since 2009, the maker of popular Creta, revenues of 70,000 crore rupees, and a domestic market share of nearly 15%. Joining me today, we've got Mr. Unsoo King, MD of the company, and Mr. Tarun Garg, COO. Gentlemen, thank you very much for joining in, and congratulations. Big, exciting day.
Thank you.
Thank you.
Okay. Mr. King, my first question is, why the IPO? Because brand Hyundai is ubiquitous in India. It needs no visibility. You don't need any cash. In fact, this is a pure offer for sale. So why the IPO? Because some believe it's probably just to capture the booming Indian capital market.
India is one of the most exciting auto market in the world, and the HMI has been performing well for more than 26 years from the 1998, and is second largest passenger vehicle OEM in India. We believe it is the right time to take a further step to Indianize our operation in India.
The whole world is looking at India today with a lot of excitement because of the high GDP growth. So we believe, yes, this is the right time, because so much success we have got in India. And now, this would be, like MD said, this could be probably the beginning of the next phase of our growth story in India.
Beginning of the next phase of growth story. But how much of a factor were the valuation differential between South Korea and India? Because some say it's an early Diwali for Korean shareholders because the Indian arm contributes less than 10% to the revenues and profitability. Yet, once the Indian company is listed, it will enjoy a valuation which is about more than 40% of the South Korean market capitalization. So there is a big difference in valuation.
So look, like MD said, we have been in India for 26 plus years and, a great success in India. And frankly speaking, this is very good opportunity because now we want all the Indian investors, the global investors to be a part of the growth story. Yes, the valuations are high, but I believe this is very good. You said early Diwali. I think early Diwali for India, because this is the best season. And we believe that, yes, once the investors are a part of this growth story, it will really encourage us even more to do better.
Okay, so talking about the growth story. Globally, auto industry is facing some headwinds. We've got Mercedes-Benz, they've cut their global growth outlook. Nissan is looking at production cuts. Ford has even cut jobs back home in India too. So far, the monthly sales numbers growth has been flattish. So talk about growth for you, because capacity increase comes in only in after 12 months. So do you think growth would be tepid?
No. Frankly speaking, we are very, very encouraged by the growth. If you see the Indian industry, last 2 years, we had a 22% growth, then we had a 8% growth. The CAGR, of course, is at 5%. So there will be always some ups and downs. And believe you me, the June, July, August period always has been a little bit of a sluggish period. But now that we have entered the festive season with the Navratras and the Diwali, things are looking very up. So we are very, very confident about the growth of the Indian auto industry. And we believe
no
that
underlying demand weakness in India.
Frankly speaking, no, but yes, look, some kind of crest and troughs would always come. Because at the end of the day, CAGR, if you see, whether you see a 5-year CAGR or a 10-year CAGR, it is at 5%. So when you grow by 22%, when you grow by 8%, some alterations would always happen. But like I said, in the mid-term, long-term, absolutely no issues.
But do you think this year we will see moderate growth compared to 8% of last year?
Look, probably a growth itself is very good. Okay. Sometimes we tend to believe that, yes, unless you grow double digit, it's not a good growth. But we believe as long as we are growing, it is very good.
So you're very optimistic going into the festive season. What's the pickup in growth rate? Can we get to double digit, do you think, in this October to December period?
Look, when you compare with September, the inquiries, the bookings, the retails are very, very good. So I think it's very, very lot of optimism around it. Also, this is after many years that in October itself, both the Navratra, Dashera and the Dhanteras is coming. So I think this is going to be a bumper month.
You said the bookings inquiries are all higher so far in the month of October compared to September. How much higher?
So if you see, it's only first 8 days, but still we are looking at about 30-35% higher than the last month.
Okay, first 8. And what about discounts?
So look, discounts are a function of the market. In the festive season, obviously, customers are looking to really buy their cars, and everybody wants to give them the best value.
So are discounts higher?
So I would say their discounts are probably at the best, and this probably is the right time to buy.
So let's talk about your capacity expansion. Now, last year, you all acquired General Motors' Talegaon plant. The first phase of your capacity expansion, which increases your capacity by 170,000 units, comes up only in H2 of FY26. And following that, in phase 2, the aggregate capacity goes up by 250,000 units. So a few questions. One, when will phase 2 be operational?
So if you see the phase 1, like you said, currently we are at 824,000. The phase 1 will be kicking off in H2 of calendar 26, which will bring us to 994. And phase 2, as of now, we believe by 2028, the balance 80,000 will come, which will take us to more than 1.07 million capacity by 2028.
Okay. And what will be the total investment between phase 1 and phase 2 till 2028 that you've planned?
We are investing the 6,000 crore in the Pune plant. And also we are investing more than 320 billion rupees for the next 10 years. Right?
Okay, so 6,000 crore for the Pune plant and 32,000 crore of an investment for the next 10 years. And how would this number of 32,000 crore compare versus the last 10 years? Are we seeing a pickup in investments in India?
So far we have invested about 30,000 crores, close to 30,000 crores. So you can see that, yes, we are as bullish in the next 8 to 10 years as we have invested in the last 28 years in India.
Is it true the cost structure of the Talegaon plant is higher, because of which even the General Motors sale, the plant sale, took some time? Is there a risk to your margins because of this?
Frankly speaking, to get the Talegaon plant like a brownfield, it's a great opportunity because it gives us, from a logistics point of view as well, it gives us another opening. At the same time, we are really making sure that this plant becomes one of the highly automated plants, in India. So we are really looking at using all kinds of automations, and so that we get good efficiency, we get highest quality standards. So I think we are really leaving no stone unturned.
So on margins, is there a risk, or margins remain stable from here on?
If you see, because the 170,000 additional capacity will come in, I think that will help us to add volumes both in the domestic as well as the export markets. So if you see the midterm, I think it will have a positive impact on the margins.
Midterm, it will have a positive impact. Mr. Kim, in fact, the company has done a great job of keeping margins stable through all the cycles that the auto companies go through. What is your own view on margins? Do you think with the help of automation, higher sales, margins from here on can expand?
We have a good track record of profitability. We have a good balance of export and domestic, and we are focusing on the premiumization, and also we are more focused on the SUV model mix, and we have a very good high level of localization and high level of utilization of our capacity. These are things that are for the better of our profitability.
In fact, let's talk about each of these three things: premiumization, increasing focus on SUV, and it's already very high, with about 70%, I think, of your domestic sales come from SUVs, and exports. Now, the global company wants to make India as the export manufacturing hub. Currently, exports are 23% of your overall revenues, hovering around that level. Where does it go from here?
In terms of export, HMI is positioning our company as a export hub for emerging market.
So do you think the percentage contribution of exports go up because it's going to be a manufacturing hub and you've got increased capacity coming on stream?
This, in terms of revenue, like you said, 77-23, in terms of volume, 80-20, looks to be a very good mix. The percentage could always vary depending on the geopolitical situation, the economics. The good thing is with the additional capacity coming in with Pune, the headroom will be there to really look at both the domestic and export markets and, to see how we can grow the volumes.
Okay. How much higher are export margins?
So, look, I can only say that because we get a lot of incentives from the government thanks to encouragement. So, we have a very healthy encouraging margins in exports as well, like the domestic margins.
Tarun, you've been in India now at Hyundai for a long time. There is one view that perhaps the company could have been a little more aggressive. You spoke about your high capacity utilization. You've been operating at more than 90% capacity utilization for a while, which means, in a way, it could have limited your growth, which otherwise would have been. Would you agree with that? Because it's the first time since 2009, since you've been in India, that you've gone ahead and even added capacity.
There are two things which are very important here. One is, what is our core strategy? We believe in quality of growth. So if you see, yes, volumes are very important, market share is very important. At the same time, shareholder return, profitability is also very important. So we have really moved very, very consciously in that direction, to have a balanced approach. The second thing is, although this is a new plant which is coming in, like you said, after 15 years, at the same time, we have been continuously working on debottlenecking and increasing capacity. In fact, as late as July of last year, we increased the capacity in our Chennai plant by 50,000 units annually. So I think the whole idea is how you can continue to grow. At the same time, you look at all the aspects and grow together. Win-win is, I think, very, very important, and that is what we believe in.
Okay, and Creta EV, I believe, is coming very soon?
Yes, financial year 25, quarter 4, Creta EV, yes.
Okay, so what's the outlook, Mr. King, on EVs? Because EV, as a percentage of your portfolio, is very small. You've only had Kona and Ioniq 5. It's currently 1% of your overall revenues. What would be the mix of EV in your portfolio, say by 2030?
So we are planning to launch 4 EV models across the premium and the mass segment, including our Creta EV, Q4, and this financial year. Also, we are localized the EV supply chain, like the battery pack, driver train, and the battery cell, etc. And we are investing charging infrastructure as well.
So 4 EV launches, including the Creta EV, which comes in Q4 of FY25. Are any of these born EVs, native EVs, and what's the timeline for these launches?
Yeah, of course. We are looking at dedicated EVs, base-up EVs, definitely. And as of now, we can just say that, yes, next few years, you will see these 4 launches, as we have mentioned in our RHP.
Next few years?
Yes.
Okay. Now, SUVs already is about, what, 65-70% of your domestic mix. Now, you've literally enjoyed and led the SUV trend in India. Are there any product gaps? Can you talk about your product launches from here on?
So, Reema, as you see that when we launched the Creta in India, SUVs used to contribute only 13% to the overall market. Today, SUVs are contributing, if you see industry, about 50-52%. As far as Hyundai is concerned, in fact, this year, we have already reached 68%. In fact, in September, we reached 70% SUV. So it's a very strong part of our strategy. I cannot talk about the future product launches, but I can say that whatever, we have always been ahead of the curve in terms of launching products. Last year, we launched the Exter, which really opened a new segment for us and really is doing very well. Going forward, we will see, where are the opportunities. At the same time, in addition to the new products, we'll also look at, how we can add more value to the customer. For example, we had the dual CNG in Exter, which is really getting some very, very good response from the customer. We introduced some more variants in Venue in the sunroof. So we look at the entire thing, and the whole objective is how to really innovate and give more value to the customer, give more options to the customer.
Market share, though, Mr. Garg, has come down. Right? You enjoyed a market share of more than 17% about 3-4 years back. It's down to 14.6%. And you are seeing increased aggression from Kia. Tata Motors' market share, which was 5-6%, thanks to its EV sales, has gone up to about 13.5%. So it's a close third. What are you doing to protect your market share and get back to 17%?
So Reema, if you see, we have been in India for more than 26 years.
Yeah.
And I think one reason for our success and continuous growth has been that we have believed in fundamentals. We have believed in really growing sustainably. We have believed in introducing new and technologies, because we have a very strong parentage from HMC. We have access to all kinds of powertrains. And like I said, we have been trying to raise the benchmark in terms of technologies, whether it's connected cars, whether it's ADAS. Today, 8 out of our 13 models have ADAS, and a very high penetration as well. So we believe that market share is very important. Nobody wants to lose market share. At the same time, we want to grow in a balanced way. Like I said, volume, market share, profitability. The new plant which will come in, like I mentioned, will add about 30% to our capacity. I think it will further really give us some more levers to increase our market share. We don't want to lose market share. We want to get back the market share, and we will do everything possible, including new launches, including, like MD said, EV. Today, if you see, we do not have too much of a market share in the EV segment, but launch of these 4 products along with localization will help us to really grab some market share in the EV space as well. So we want to grow sustainably. We want to grow in a balanced way.
Okay, and you want to get back your market share, which you've lost and conceded in the last few years. Can you talk about how being a part of the South Korean entity, HMC, helps your India operations? What is it that Indian shareholders need to know? Because you are paying a royalty of 3.5% to the parent company.
If you see, we have really gained a lot from HMC's strong R&D capabilities. Like I mentioned, the new technologies, the new models. The Creta came in 2015 because we knew that, yes, globally, because HMC is so successful in markets like US, Europe, Korea. So we have access to those trends. We keep our eyes and ears to the ground. So I think it's a very good mix, Indian as well as the global, strength. Then Blue Link was introduced in 2019 in Venue. We had 6 airbags as standard when we launched the Exter across all models. So I think in terms of technology, in terms of new models, in terms of today, if you see, HMC has all kinds of technologies. Petrol, CNG, diesel, strong hybrids, plug-in hybrids, electric vehicles. So I think this kind of an easy access to HMC's powertrains, HMC's R&D capabilities. Also, if you see, infotainment is becoming very important. Going forward, maybe software-defined vehicles will become very important. So I think HMC's R&D capabilities are very critical. Hyundai brand, because HMG is now the 3rd biggest globally, the OEM in the world. So I think that gives us a very strong Hyundai brand. Then in terms of manufacturing and quality standards, so you can see the 3.5% royalty gets us access to technology, gets us access to brand, gets us access to know-how. I think this is a very good proposition for us.
When do you next revisit the royalty agreement? Is there a risk that it goes up from 3.5%?
So we believe that, yes, it should be for a long time. We believe that it should not. There's no reason to change it. In the near future.
Okay. Now, Hyundai Global also owns a 34% stake in Kia Motors, and the global company is promoting both equally, Kia in India and Hyundai Motors. Is there a conflict of interest?
Hyundai Motor Group is the 3rd largest OEM globally, and Hyundai and the parent company based Hyundai and the Kia are listed company in Korea, and Hyundai and the Kia are operating differently, and 2 brands started working very successfully in the global market, in the US market, European market, Korean market. Now it's the same as well in India.
Okay. There is no conflict of interest. There is no preference which is given or increased aggression shown by the parent company to promote Kia over Hyundai. And how does this Indian listing change the equation between the two?
Absolutely not. Because we are working independently. Like when I need a model, I will raise my hand and tell my parent that, yes, this is my study of the market and this is what I need. So there's absolutely no conflict.
Okay. What about related party transactions? I think income from related parties is about 8.3%, and expenses from related parties as a percentage of the overall expenses is 34%. I add them up, we're talking about more than 40%. Where does that number go?
So if you see, HMG like MD said, that 3rd biggest global OEM. So we have an access to the entire Hyundai ecosystem. I think this is a huge strength. as far as related party is concerned, all the transactions are done on an arm's length basis. And of course, confirmed by auditors. We have a very strong set of independent directors who oversee our activities. So we have been in India now, like I said, for 28 years and really conducted business with the highest standards of governance. And we intend to continue on the same path going forward as well.
So 40% related party transactions could stay at these levels and it's not a concern for you?
Look, frankly speaking, I think how we study this related party is very, very important. If you see our localization, you know, we are approximately 80% localization. So, you know, how we study this related party is very important. For example, Mobis, you know, it provides us modules. You know, basically the parts, and it has a factory near our plant in Chennai, and that's a huge advantage to us because it gives us great quality. It does not mean that it's actually a value addition. Value addition would be much less. So I think it is all about also how you read these related parties.
Revenue growth from here on?
Positively.
Margins?
Stable.
Market share?
Stable.
The most exciting launch to look at
Creta EV.
by Q4 FY25?
Yes.
And view on EV?
Very strong.
Okay. Thank you. Thank you very much for joining in.
Thank you.
Yeah, thank you so much.
Thank you.